finally broke out of the consolidation like I expected in our last couple of videos. It was a lot of consolidation. I didn't expect it to be this long, but we did end up having the move to the upside, and I do expect some more continuation later on this week. There is a possibility, if we look at the 50-minute chart right here, that we maybe get on Monday, so tomorrow, a retest of this 385.96 level. This is a rough level that's based on the range we were trading within. You can see here the lower end would be 378.15 with the higher end being 385.96. We basically traded between this range for the entirety of the last 2 weeks until we did break out above it. This is a very key level, and as you can see here, we touched it. It acted as a pause point at first, but then we continued and carried above. So this shows a lot of strength, and this, as of now, is a clean breakout to the upside. So yes, there's a potential based on the close we had from last week that we do have a retest of this level. However, I believe we will get into at least the low 390s before having an additional move, which I personally believe will be to the downside. However, there still is some range for us to go. There's even a possibility going as high as the high 390s. However, this range is very dangerous as of now, at least if you're a bull, because there's a major head and shoulders pattern right here, and head and shoulders are lethal in a bear market. You can see from the past year, just because we've been in a bear market, there's a lot of head and shoulders patterns that played out. You can see back here in August when we had a major downside move afterwards. We had a left shoulder right here, we had a head, and then we also had the right shoulder before collapsing downward after. So these head and shoulder patterns, especially one like this that's very sizable, this one is small in comparison to the one that we have right here. If we see a breakdown from this level and the head and shoulders plays out, we will most definitely go below the 3,500 low that we made from last year. That's at least on SPX. It'd be roughly 348 on SPY. Now we still have to see this head and shoulders play out because nothing is guaranteed in the market by any means. However, it's a good thing to note, especially if we break below the 378.15 in the future. Let's say, for example, the next couple weeks we kind of trade within this 390 or at least low 390 range, bounce in between and everything. If we saw that and then fell below 378, let's say late January, early February, then that would mean that the neckline of this head and shoulders pattern was broken, and we'd most likely see us retest at least these lower levels around the high 340s. So something to note, especially because it's an early pattern that's currently developing real time, and it's something you just have to be careful of, especially as long as we stay below this orange line right here. For reference, this one in the past in many videos, this one goes all the way to the 2009 low that we made all the way back after the financial crisis back in 2008, 2009. You can see here it acts as a start to a pivot from back there in 2009. It was the exact low we made from the financial crisis, and it goes along, acts as a resistance many times as we went up. Also was the resistance before we had the 2020 crash, and we did go up above it. However, we fell back below in 2022, and now we still are maintaining below. It's acted as a resistance so far, and a pretty hard one at that, and we've stayed below so far. So the mid to macro term remains bearish because we are below this level. Price would need to get back above and stay above for us to see a possibility of a midterm bullish bias, because as of now, it is a very bearish bias for the mid and long term. And also on top of that, in the short term to midterm, we have a head and shoulders pattern, which, like I said earlier, can lead to a lot of downside. Now, we saw a lot of potential clues based on order flow from Friday. And what's interesting, if we dissect the price action from just Friday, which started here on this big red candle to the downside, first of all, this kind of candle like you see on the 15-minute typically means there's further downside to come. However, we ended up seeing a squeeze from this level. And what's interesting, if you look at the order flow for SPY and scroll down to the morning, it was very, very call heavy. It was skewed to the call side. All of what we were seeing, at least for above 1 million in premium, if you filter it on Cheddar Flow here, anything above 1 million in premium, we only saw calls for the entire morning, literally until after midday. We started to see some puts come in, but for the most part, just throughout the morning, it was a ton of calls, and a lot of these were out the money. You can see the 400 strike right here for 1.2 million in premium, for 217, pretty close in expiration. We saw a lot of out the money, at the money kind of calls hit the tape throughout the entirety of the morning, which is very rare, especially in the current bear market scenario we're in right now. If you look at previous days, we typically see a lot of puts hit the tape, or just puts and calls that really aren't that directional. These are very directional to the upside, at least, and we saw a lot of premium backing them with a relatively short expiration other than these June calls, but still very bullish in the morning. What's interesting is we ended up having a very nice squeeze throughout the entire morning and continued upward throughout the end of the day. Now, if we look at the flow for the end of the day, what's interesting is you can see a lot more put heavy, and not only put heavy, we saw some sizable puts that were out the money by quite a bit, like this one right here, 371 strike for 4.7 million in premium. This is a very rare print. We don't typically see ones like this. We did see them back in like August and September before we had a lot of downside. Like if you look over here on the daily chart, what I just showed you with August, if you remember from back then, around this time period where we saw this price action leading to the downside, we saw a lot of puts hitting the tape, especially ones that were very similar to the one right here for this 4.7 million. So this is a very eye-opening print and something that I will be monitoring, especially because it came at the end of the day. So something very interesting there. Also, I would not count out these 390s. These are pretty much close to at the money. They got these at 388.99, then also 388.97. So these are just a little bit in the money, but still 390 strikes for 421. We saw a lot of premium going into these as well. So pretty skewed to the bearish side once we got closer to the end of the day, which is very interesting how we saw in a complete reversal from what was happening early on. And this leaves me to believe that some of these bears potentially see the possibility of this head and shoulder playing out, and they're starting to gain exposure. Personally, just based on technicals, I don't believe we made a high of this move yet. Again, I'd like to see low 390s at the very least before a potential consolidation and then a fall to retest the 378 level, which if that breaks, we will see this head and shoulder play out. Like I said in the intro of this video, this does not mean that these calls from earlier that are most definitely in the profit from that morning won't be profitable at all. It doesn't mean that in the slightest. There's still possibility of some more upside to come, like I said, for the low 390s. And at the end of the day, these bears, like we've seen in the past, they like to start gaining exposure early. A lot of the times, whales can sit on contracts that are down quite a bit if they are very confident in their eventual thesis, especially if they add enough time, like we saw with these April puts. They can wait throughout January for all they care. Even if we're around, like, let's say high 390s or so, they're able to wait. They have their own risk criteria. So it's important to see kind of when the sentiment is starting to shift. It doesn't have to be immediate. A lot of people like to see stuff happen in the immediate term, like, oh, we saw 4.7 million print. Let's see where this was. This was at 389.19. If you look back over here, based on the 15-minute chart, we ended up seeing a little bit of a rejection right off of this level. So they did end up getting it right at the high day, which is pretty funny. Makes me seem like a hypocrite for saying that. But for the most part, even if it didn't happen and they continued to go up from there, it wouldn't matter. They're fine. They don't have to nail the exact top. Although I do find it funny how they did it, nail the exact top in this scenario. Doesn't always have to happen that way. And that's just what I'm trying to show you guys so you can understand. It doesn't have to happen right away. It could take a few days after a print like this comes in. You can see higher prices discovered. But then when that desired outcome or that move starts to occur, at that point, it's beginning to be way too late for you to enter in that position. So typically they like to add on the way up. And even if there is some more room to go to the upside, they're still able to hold on to it. They're well within their means. 4.7 million may seem like a ton of money to many of you guys. However, these are people that have a lot. Just think of hedge funds with billions of dollars out there. This could be someone with billions of dollars that is taking a position on a bet like this. So 4.7 million is well within their means. They understand risk, which all of you guys should understand your own risk. You don't have to look at these types of prints and want to put in a ton of money just to try and mimic them. Always trade within your means because risk is a very key component of trading. Additionally, if we look at the dark pool prints, what I found very interesting, if you look at this image up here that we have, look at the purple line. This was the majority of the dark pool prints we saw on Friday, and it happened right at the low of the day, which is very interesting because if you go down from here, you could see we had $3.5 billion worth of premium in dark pool prints, at least signature dark pool prints, that is, for the 379.41 level. Look at this if we look over at SPY from right here. Remember, signature prints are delayed by 1 day. That's by design because they're off of European exchanges. But if you look at that level, it literally was the low before this major move up. You could see here in the 379s around this range from here, we ended up going way higher from off of this. So this most definitely was some form of a buy. And they did end up nailing the exact low of that move from the day prior. So this is definitely a key level to watch, especially if it is retested in the next couple weeks, because if it's broken to the downside, then we will see a lot more downside off of that. Kind of similar to what I showed you with the 378 level. If we do end up retracing to around here in the next couple weeks, I don't expect it to happen this week, but something to note for the future. If we do end up falling back from here, it's probably going to be more favorable to the bears if we do get under a key level like that 379.40 roughly level that I just showed you here for the dark pool print. So do keep that in mind for the future. Mark it on your chart if you need to, and it can be very useful for future price price action and dissecting potential outcomes for the market. And the last thing I want to talk about today is Tesla. What's very interesting about Tesla's chart is we had a very large gap down on Friday, which characteristically, if you've seen the gap downs previously that we've had, it leads to a lot more downside like we had back here in early January and also throughout the entirety of this downward move. Whenever we had a gap down, typically meant a lot more weakness throughout the day. What's interesting about this gap down, and which shows a lot of strength, is the fact we had a major gap down that was filled to the upside in the same day. That shows a ton of strength and typically means this is at the very least, a minor to midterm bottom that has formed. Personally, I've shared with you guys before, I expect it to get at least under 100 for Tesla, and I do believe that will happen. However, a move like this delays the eventual price of, let's say, sub 100 for Tesla because it shows a ton of strength to the upside, like I just said. So do keep this in mind. I would not be interested in shorting Tesla for that sub 100 price target anytime soon just because of this upside, but at the very least, this just delays the eventual outcome for, let's say, 1 to 3 weeks. I still believe we will get under 100 for Tesla. And what's interesting also with that, we did see a $95.7 million in premium call here. This was pretty deep in the money, so it's not the same as seeing a super far out the money call, but still very interesting to see a very heavy premium print. And also this one was at the ask, as you can see here in order details. So pretty crazy print for Tesla. You typically don't see ones that have this much premium behind them, like 95 million. And this one happened at 111. So we did close the day further above that level. So there was a lot of call flow to support this move to the upside. Again, I don't believe this is a major bottom that's formed. However, at the very least, this will hold for the next couple weeks just because it shows a lot of strength. And this is just a critical kind of thing you learn from experience whenever you see a gap down like this that's filled to the upside. Again, just shows strength plus a lot of volume on top of it. So personally, I'm not interested in shorting Tesla anytime soon to get the desired sub 100 outcome. However, it's something you should be aware of. And other than that though, appreciate you guys watching this video today. We'll see how this week treats us, and I will see you guys next time on Wednesday.